Oh, we just had a massive rejection in the marketplace, and this is important because, woo, we combine these rejections with catalysts coming up. Maybe the market's setting up for a little bit of a breather doodly dodla. And in this video, I'm going to break down not just Bitcoin, Nvidia, but also touch on Tesla, something I inadvertently leaked this morning, and we'll talk about it. But anyway, let's get into the subject of the video. First, we need to understand the rejection that is occurring in the market right now. Nvidia perfectly trended towards our $969 Fibonacci retracement level. If we go out on the day chart, we could see, and we remember this, if you've been watching this channel, I said, look, we've got a lot of pent-up demand right here at 500. If we break 500, we might be going straight to the next fib, which guess what? We did. We waited for earnings. Earnings reiterated that we could actually break through that fib. Guess where we went to next? Boom, 974. This morning, what happened? We hit 969. This morning, not only did we hit that 969, we got rejected by it, rejected again on the minute candles, broke through. Now, really, to get a real support, you have to have a full day's candlestick above support, right? But we couldn't even pull off staying above it for a few minutes because as soon as we dropped that support, straight down for Nvidia. We went from 4% gains to 1% losses. And this is going to beget some issues going forward. But it wasn't just Nvidia. We just saw this happen at Bitcoin as well. Look at the week chart on Bitcoin. We continuously broke different resistance levels for Bitcoin. When we broke 48K, what was the next stop? 57. When we broke 57, what was the next stop? 69. Take a look at it on the day chart. You can see we actually had this little midpoint break right here at 52.4, which wasn't really fib-based. So maybe not as good of a fib as Nvidia, but it certainly held here with both resistance and support. Lot of support right here at that 42 level as we got rejected at that 48 level. And then when we finally broke through, we did push through 57 pretty quickly. Now getting rejected here, though, has led Bitcoin to move pretty volatilely. We just broke 70,200, coming down now. So what are these potentially going to beget? Well, maybe nothing. Or it's time for a breather in the market. Now, I'm going to go through some catalysts in just a moment, but first, let's look at some of the Bitcoin numbers that we've broken down over at ehack.com. The first thing I really want to draw your attention to is when volatility is really high, we do tend to come back down. We usually don't stay at high volatility levels for very long. We usually average lower. And take a look at this. When we look at the period of the FTX bankruptcy, we could see we're right there at some of these high levels of volatility compared to the low levels we've been on for Bitcoin volatility. We've gotten rejected on some of these levels before, these higher levels of vol. So it might be time for a settlement under this resistance level and a little bit of sideways trading for a while. That's actually healthy. That's not arguing that this is bearish. It's arguing that it's healthy for the market to take a little bit of a breather. Now, we do have some very exciting catalysts for Bitcoin and as well as Nvidia, which I'll talk about those. Obviously, we've got the halving coming up sometime in April, where we're going down to a token reward of 3.125. We've had crazy 7-day rallies, Pepe up 131, Near Protocol 35.4, Uniswap 23, Polkadot 21.5, Shiba Inu 138, Doge 27, ETH 14, Bitcoin 9%. All over the last 7 days. And of course, we've got the Ethereum Dencun upgrade, which I actually think is going to be a really good one. Why? Because it reduces the practical fees of your layer 2 blockchains. This is a big deal. In case you don't know what that means, quick explanation. I'm oversimplifying this on purpose. You sit on layer 1 Ethereum, there's your coin, and on top of that, you could build other sort of tokens. And if you transact at tokens, you're still paying these expensive Ethereum transaction fees. But if, let's say, instead of doing a 1-to-1 transaction, you could do 100 transactions and then roll up all of those transactions into one Ethereum hash, you could divide that fee over 100 different fees or transactions and lower the cost per layer 2 fee or transactions substantially. That's good for practicality, and this is what you want to see long term. You shouldn't see lower security as long as rollups are frequent enough, and lower fees should really help you get larger batches more quickly. So this upgrade comes out on March 13th, which is very exciting. That is a very near-term catalyst. So you want to mark your calendar for a few things here. For markets and crypto broadly, you've got to mark your calendar for March 13th on Ethereum. You want to make sure that protocol upgrade goes smoothly. It should be fine. I think that's a positive, and it's a good thing for layer 2s. Probably not such a big deal for Ethereum, though, itself. Now, as far as CPI comes out as a catalyst on March 12th. We're going to have to focus on March 12th. CPI expectations are month-over-month 0.4 and core 0.3. Both of these are going to affect crypto and Nvidia. These numbers are risk catalysts, and what we're looking for are softer numbers. We want to see those inflation numbers come in softer. This should be obvious. This morning, we actually got good news. And this morning is probably the reason we ran on both Nvidia and Bitcoin. Why? Because we had downward revisions on the household survey for employment by a substantial figure, negative 185,000 job loss this morning on the household figure. The payrolls report had some large revisions as well, down 124,000 for January, down 43 for December. Still obviously positive, but way less positive than we previously expected. And so those downward revisions, pretty classic. Most important, though, this morning, that wage inflation number coming in at only 0.1%, suggesting the Fed's fear over inflation probably shouldn't be that big of a catalyst of concern. That's good for risk assets. You want jobs up, and you want inflation down. That helps your Nvidias. That helps your cryptocurrencies. That's one of the reasons we've been seeing the moves that we have. And frankly, we are seeing disinflation across the board at especially goods producers or goods providers. Less so at some of the service providers. This morning in our course member live stream, we went through MGM and we went through Marriott as well, just to see what's going on with price action. As we compared the price action for Costco, you have to know this, and this is a good thing for markets and for risk assets. Yes, Costco missed this morning, but what's Costco telling you? Our traffic frequency is going up, but ticket numbers really are not. Why? Because they're reducing prices. This is a business that is reducing prices. They want to be the first to cut prices. They literally tell you that. They were forecasting 0 to 1% inflation. Now they think it'll essentially be 0. They're taking price reductions where they can. They're literally listing out all of their price reductions they're doing. And they're saying they're not seeing meaningful pricing issues from Red Sea challenges. Instead, they're focusing on being the first to lower prices. Talking deflation here. This is very good for risk assets. But could we have a short-term breather leading into the Fed March 20 meeting where we're going to get a new summary of economic projections that could potentially forecast less than 3 rate cuts for this year? Yes, absolutely. All the Fed has to do is tell us, hey, look, we see less unemployment than we thought by the end of the year, and we see higher terminal rates than the end of the year. The market's going to have to price in that rates might actually truly, as the Fed has told us, stay higher for longer. And so that could potentially set up for a breather over the next 30 days, which did create a very interesting inadvertent leak of my thesis this morning. I accidentally set the course member live stream public this morning. I didn't mean to do that. And I revealed a thesis. And I think just in fairness, since I've kind of revealed that portion publicly already, I don't want people to feel like there was some rumor mill going on or whatever about Kevin selling Tesla or something. I want to be very clear about what I said this morning. Yes, we did talk that there could be a strategy for selling Tesla. And the strategy is a 30-day trade. I want to be clear, it's a trade. It's not a long-term. Keep it very simple. The strategy potentially on Tesla is that you tax loss harvest for 30 days and you trim and take gains on Bitcoin or Nvidia as an example. So think about that for a moment. Let's say you have $10,000 of gains in Nvidia and $10,000 of losses on Tesla. Okay, so well, if you trim some $10,000 of Bitcoin or Nvidia because you want to diversify, who knows, maybe you want to invest in House Hack. You know, we've got a House Hack fundraise going on at househack.com/2024. Read the PPM there. Or maybe you want to buy a ticket to my event June 21st to 23rd in Vegas. And so you're going to sell some of your Nvidia and your Bitcoin. You're going to take that $10,000 profit. And then maybe you sell $10,000 or you take a $10,000 loss on Tesla by purposefully tax loss harvesting those lots. Keep in mind, you have to use certain portals like Fidelity, Schwab, TD Ameritrade, JP Morgan. They let you target tax lots. So you could basically say, look, I want to sell the Tesla I bought at 260, but I don't want to sell the Tesla I bought at 130, let's say, right? So you take the loss here and then you offset a gain with a loss. So now you're not paying taxes on your Nvidia or Bitcoin. And given that we just got rejected on Nvidia and Bitcoin, there could be a 30-day opportunity to pull one of these trades. Now keep in mind, immediately rebuy your Bitcoin or Nvidia. You just can't immediately rebuy something substantially similar to Tesla. So what does that mean? Well, what that means is, and talk to your CPA to verify this, but what you do is for 30 days, you would sell Tesla, buy something that's not substantially similar. So maybe you buy an ETF that has Tesla in it, but you hedge out maybe 80% of the Tesla downside risk from earnings coming up and deliveries coming up, which are expected to be negative. You get through that period. Earnings are on April 19th, so you could play before or after a little bit. In the meantime, you take some tendies on Bitcoin and Nvidia. And then what you do is after you've offset this and you've moved that money maybe into an ETF for Tesla, you could actually rebuy your Nvidia and Bitcoin immediately. Because the way taxes work is if you take a gain, you recognize the gain instantaneously and you can rebuy instantaneously. But in order to take a loss, you have to be out of the position for 30 days. Otherwise, you hit the wash sale rule and then you lose your tax write-off. And you also have to offset it with other gains. Otherwise, you hit loss limitations at the end of the year of like 3K, unless you have other offsets, right? So of course, I'm being very broad here because I'm not your CPA. I'm not here to tell you what to do, but this is a potential strategy, okay? You've got the Fed meeting on the 20th. It's a big catalyst for a reset in this market and a breather. We're not like that'll give us a breather. We've got CPI data coming in, but again, the Fed is going to drive this boat on March 20th, and there is a potential opportunity in this trade that I've just described, especially since we've had optimism and high volatility for so long. And usually when you have high optimism for these extended periods of time, you do end up running into a breather. Again, I'm not here to be a bear, okay? I'm not here to say everything's going to poop. But look at this future pricing, volatility pricing on Ethereum, for example. You're at really high levels right now. So you're paying a real future premium to sort of get into the FOMO right now, to get into the excitement, to get into the enthusiasm. And if you take a tax play while at the same time, protecting yourself a little bit from some downside, there might be an opportunity to do that. I'm not saying do that with your whole portfolio. I'm not even telling you to do it. I'm just saying some people might do that. And if you see a sideways or downward trending market for the next 30 days or so, that could just be a healthy rebalance. Now, some Bitcoin bears actually argue that Bitcoin being supply limited might end up starting to be, quote, priced into Bitcoin, and eventually you'll see Bitcoin trade sideways. I think everybody has to have their own opinion on that, since most people think the lack of supply hitting that supply cap for Bitcoin will be a never-ending force of basically Bitcoin moving up and away. Some argue that you could actually fully price in that it could just move on up forever. And then you'll get a lot of sideways trading. And then when it underperforms other assets, you could actually get down trading. Now, that's really interesting. I don't really know what to make of that. That's just something that some have said. It's an interesting idea that I posted about at ehack.com. But again, we call this a contrarian breather, and it's entirely possible that after these runs that we've seen, we are going to experience a continuation of some form of contrarian breather. That does appear to be the case, at least today, in terms of the rejection that we got at Bitcoin. This is very violent. A very violent downtrend as soon as we got rejected. And this swing on Nvidia is insane. We literally got rejected at 969. We went from positive 4% to negative 4% on the day. I think what we've described is happening. We will see. But again, buckle up. Thank you for watching. If you found this helpful, consider subscribing. None of this is financial advice. I love you all. I want to give you insight into perspective on what might be going on. I always try to be early at telling you these things. The problem is sometimes when you're early, you know, it's indistinguishable from being wrong. I'll give you a quick like slap in the face to where I was wrong. Costco, okay? Costco missed. Costco's down 6%. I shorted Costco. It's right here. I wrote short Costco. But I shorted it like a month ago. Way too early. So sometimes being early is indistinguishable from being wrong. But anyway, I hope this is insightful for you. I really appreciate you, and we'll see you in the next one. Good luck and goodbye. Oh, button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Well, there you have it. Thanks, folks. Bye.